Welcome to Stocks Review. Inflation rate is reaching a multi-year high. What should we do to preserve or grow our wealth in such an environment? Let us take a look at the components of Consumer Price Index. Housing and healthcare combined takes up over half of the amount. If we can find something that has both real estate and healthcare sector exposure, then it might be a good investment to hedge the inflation. Therefore, a healthcare REIT may be a good investment choice in this scenario. Today we are going to take a look at Welltower. Stock ticker symbol WELL. It is headquartered in the USA and service regions, majorly in North America. It has a market cap of $40 billion and is considered a large cap company. It is in the real estate sector and REIT industry. Welltower invests with leading seniors housing operators, post-acute providers, and health systems to fund the real estate infrastructure needed to scale innovative care delivery models and improve people's wellness and overall healthcare experience. Welltower is a real estate investment trust, owns interests in properties concentrated in major, high-growth markets in the United States, Canada, and the United Kingdom, consisting of seniors housing and post-acute communities and outpatient medical properties. In short, it is a healthcare REIT. It has a 5-year compound annual revenue growth rate of 2.1%. The revenue growth is consistent and the revenue trend looks very strong. The revenue trend is important as growing companies often have sales go up first followed by profit growth. On the other hand, when sales become stagnant, it may also give us a hint that the growth phase of the company may come to an end if no critical change is made. The adjusted fund from operation is unstable. The AFFO trend looks ordinary and there is no consistent growth. It has been issuing more shares in the recent years, probably to fund its growth. We should always follow closely if a company is buying back or issuing more shares, as both of these activities greatly impact the return shareholders can get. It has just slashed its dividend recently. That is not a good sign. The dividend history gives us a peek of a company's cash flow stability. The overall shareholder return of Welltower is quite good and slightly outperforms the historical performance of the SPY. The total return and annual growth rate history of a company can show us what the performance trend was and how it had navigated through difficult times. Most companies tend to perform similarly with a slight decline in growth as time goes by. Welltower has a 37-year total return of 9,680% with a 37-year compound annual growth rate of 13%. If you had $1,000 invested 37 years ago, you would have $96,800 now. Currently, the price is at around 88 with a 52-week high at 99 and 52-week low at 73. It is near the middle of its 52-week range. It has a price to AFFO ratio of 30.5 and forward price to AFFO ratio of 27.6. It has a cash position of $300 million and long-term liabilities of around $15 billion. The ratio of cash, debt, and market cap may help us evaluate the default or bankruptcy risk and what percent of your share is eroded by debt. Higher debt also has a higher cost in an elevated interest environment. Welltower is considered a no-moat company according to Morningstar's rating. Currently the margin is 6.4% and future margin after 5 years is expected to be 15.6%. The margin is expected to be increasing a lot after 5 years. The company's margin and moat reflects the pricing power of the company, and the projected trend is also important. We want to own a company that is able to stay profitable and relevant. Now, about the future projection. It has a 5-year forecast revenue compound annual growth rate of 11.3% and 5-year forecast EPS compound annual growth rate of 16.1%. The near-term growth is expected to be good. It has more miss than beats of analyst consensus EPS estimates in the last 4 quarters. That's a disappointing performance. The overall analyst recommendation rating is a buy with trend shifting towards buy recently. The rating trend gives us a clue of the changes of what analysts thought about the stock. Out of 18 analyst 1-year price targets, the range is 83 to 111 with an average price of 99, which is well above the current stock price. Since Welltower is a REIT, We present two models for valuation based on book value and adjusted funds from operation. If we run the book value model, the fair price is 83.5 with a downside of 4.5%. If we run the adjusted funds from operation model, the fair price is 82.5 with a downside of 5.6%. Now we compare Welltower with U.S. Treasuries and SPY. Currently, the 10-year Treasury yield is around 2.8%. The SPY is considered one of the safest and most liquid ETF for investing in the stock market. Big funds and investors directly compare the risk and return of investing in SPY or in individual stocks. The historical return of all stocks follow the earnings trend long term. However, the real return is often reflected by a mix of dividend and buybacks together with revenue or profit growth affecting the valuation. The return yield of SPY is at around 10%. The SPY has an average forward PE around 16.5 now. Welltower has a dividend plus 10-year growth forecast plus shares buyback yield at 5.8% and a forward price to AFFO around 27.6. We have to be cautious that this is just a rough prediction of Welltower's future performance. The forecast can be changed at any time and the actual revenue or net income the company is able to get depends heavily on the true market condition. Looks like Welltower is more expensive than the SPY and SPY looks like a better buy with a more stable return estimate. We will try to summarize all the information above to give us an overall impression of Welltower. In summary, Welltower is a large cap stable company with small growth and no moat, and probably overvalued now. If you want an investment that can act as an inflation hedge, then Welltower might still be a good option. Now that's a review for Welltower stock. Click the subscribe button for more up-to-date stocks review. If you like our content, leave us a comment and click the like button to give us some support. We hope to see you next time.